Joe, good to see you doing evening. How's it been? How's things, Joe? Pablo, good to see you. How you doing? How you been? How's things? How's everyone doing today? How's your weekends? JP, good to see you as well, brother. How you doing evening? How you been? T, good to see you as well. How you doing? How you been? Hey, brother Miles. How you doing, brother? I'm doing great, Bert. How you doing? How you been? Hi, Miles. Hope your weekend was good. It was great. Good to see you as well, Artistic. How you doing? How you been? Evening, Miles of CMF. Money, good to see you as well. How you doing? How you been? Evening. Mav, evening. Good to see you as well. I'm doing great. How you been? Good evening, Miles. Did you get my good message? Did you get a good massage and chiropractor? I did not go to a chiropractor, no. It just weared off, I'll be honest. The back pain slightly weared off completely. But I've never been to a chiropractor, to be very honest. Always wanted to go to a chiropractor, but I don't know if I trust them. But one day, maybe. Good evening, Miles and CMF. Bullock Soppy, good to see you. How you doing? How you been? But Susie, good to see you as well. All good, thank you. I had a restful weekend. You? Yeah, definitely restful, I would have to say as well. Good evening, Professor. Good to see you as well, funky brother. How you doing? How you been? What's up, Miles? What's up, CMF? Kerry, good to see you as well. How you doing? How you been? Hello, Miles. Johnny, good to see you as well. How you doing, Johnny Bravo? What's all the noise and commotion going on in the X app? It was nothing. Don't worry about it. Evening, CMF. Good to see you as well, Frankie brother. How you doing? I bet he's watching. I'm not sure if he is. Feels so good. You must. I'm thinking about regarding chiropractor. Hi, Miles and CMF. Dennis, good to see you as well. How you doing? How you been? Market is very bad. I brought XRP at $2.50 and now it's dumped. Don't worry about it, Johnny, because I'll rectify one thing when we do start live off. Stay away from them. Yeah. Morning, Miles of CMF. Shelly, good to see you as well. How you doing? Morning. When does anyone expect an upside for it? For the market? Well, the last episode we did, which was on Friday of this live, so Monday to Friday, I talked about how we don't have any good news inside the market space. So, and everyone knows I don't edit my lives in any sort of a way. I discussed the matter of we don't have any good news inside the market space. So the market's just going to go wherever. It's going to be volatile, essentially. And we've got to a stage today where a few factors are weighing in. Before I actually do go down that route, let's do this first. Welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Miles Family. My name is Miles. I'm the host of this live that you can tune in Monday to Friday on YouTube and X Live. And on this live, I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. Vital information for you to know about regarding how the world is transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And we also do Q&As on this live as well, which means if you do have any questions, put it down inside the comment section. Be more than happy to answer any questions you may have. Now, let's go inside the comment section first before we go through any news. And if anybody's got any questions, go for it. Let's see what the questions are. I'm guessing a lot of people want to know what's happening inside the market space and why is there a dump. And it goes back to what I did say on Friday. So the last episode of this live, which was on Friday, essentially, that aired on YouTube and on X, I said there's no good news on the market space in terms of we still don't have regulations. One of the main reasons why the market space is still very, very volatile to any sort of macroeconomic events or any sort of ruptures of news, major news, is because we don't have regulations. The longer we don't have regulations, the longer the market will stay volatile. And essentially to any effect, to any sort of macroeconomic events, to any war, essentially, and war newses or tariff news situations, or any of those sort of matters. So the market is always going to be volatile unless we get regulations coming in. I said that last Friday as well on this live. And I said we don't have any good news. And therefore, the biggest good news is going to be, well, the rules and regulations, which we still, again, don't have. Now, about a year ago, I said to everyone on this live, 1 year ago, I said to everyone on this live, The more institutions that come into the crypto market space, these were my exact words. And every single live that I do, nothing is edited. It's just posted as it is automatically by the platform itself. So I don't edit any of my lives to, say, oh, I didn't say this or I didn't say that. I say everything and nothing is edited. And I said about a year ago, I said the more institutions that come into the crypto space, expect a lot more volatility, expect a lot more manipulation, I said, the more institutions that come into this crypto space. But I also said, expect a lot of money. With a lot of manipulation comes a lot of money. Now, that lot of money did enter the market space, but mostly towards Bitcoin. Why? The Bitcoin ETFs, because that's where institutions could put their money in. So a year ago, I told everyone, the more institutions that come inside the market space, the more essentially manipulated the market space will become, but also expect a lot more money. We got a lot more money, but only towards Bitcoin ETFs, because that's the thing institutions could buy. But we're expecting a lot more, essentially, volatility inside the market space. Reasons of why we're expecting volatility inside the market space. As I said also last Friday, and then essentially in any other live that I've pretty much done on this, essentially, on the CMF, is that we don't have regulations. The longer the CFTC and the SEC take on creating regulations for the crypto space so it can be utilized, the longer the market's going to stay volatile and be essentially, very volatile to any sort of news, volatile to a hack on Bybit, volatile to macroeconomic events, volatile essentially to token releases, as also happening with Solana's case, hence why Solana is dropping quite drastically. But here's a little brief situation of what's happening. So these are the factors that are in play right now. Significant security breaches, it's what's still weighing in on the market space. The Bybit exchange experience that I revealed essentially last Friday, it's still weighing in on the market space because the money's still lost, it still hasn't been found, and Bybit is offering some sort of offer to anyone that's a white hat hacker that's able to get the money back. So that's still weighing in on the market space regarding the whole Ethereum situation. And about $1.5 billion that was stolen roughly is now split into 57 wallets by the hackers. Another thing that's weighing in on one particular crypto project essentially this week is Solana. Solana is going to feel a lot of pressure going in this week. Reasonings why. There's a token release that's happening for Solana from FTX exchange. So therefore Solana is going to be quite a bit volatile. Then we also have the Dogecoin situation where there's apparently some reports of large insider sale that's going to be happening in Dogecoin. So Dogecoin is feeling the burn on that particular case as well. Then we also have the macroeconomic events that are happening around the world in terms of tariffs, which are still continuing. And some countries are still trying to play it off as, they can continue being tariffed by the United States, but it's just a losing battle. The faster they give up, the faster the world can move on. Trump's tariffs are not a bad idea. It's actually a positive idea in the long run for America's economy. And why is America's economy important for you if you live in a different jurisdiction or different country around the world? Well, if the American markets are positive, the world market is positive. The American markets are down, the world's market space is down. It's as simple as that. So Trump's tariff situation, although they do cause volatile stages in the market space, which is still causing, it's actually a positive in the long run. Short-term volatility for long-term positivity is what I've also said as well. So a few factors that I have said is last Friday, I said to everyone, we still don't have any sort of major good news inside the market space. We need rules and regulations, which we don't have. Therefore, the market will be volatile. A year ago, I told everyone that the more institutions that come inside the market space, the more volatile the market space will become, but expect a lot more money. More institutions equals more volatility, more manipulation. As I said, these are my exact words a year ago. I said the more institutions that come inside the market space, the more manipulated the market space will become. But I also expect a lot more money. We got a lot of volatile stages, a lot of manipulation, but we did get a lot of money, mostly towards ETFs, because again, that's the only thing that they can buy. And also, on the topic of buying the top, a lot of people are creating videos and saying that crypto influencers or somebody else made you buy the top, made you buy the top. I've said this for the longest time. Some crypto projects are still cheap for what they're going to become. Some projects are something that I wouldn't touch. I said for the longest time, I wouldn't touch Solana by any sort of means because it does look like it's went really, really high in price points. I said the projects that, in my point of view, that haven't topped out in any sort of a way is still XRP. XRP still hasn't topped out. Some people might say, no, XRP is also topped out, but it hasn't. The case is just about to come to an end, which is going to give it a little bit more of a boost. Then we have the CFTC and SEC coming together for rules and regulations after a decade. They established the rules and regulations. Banks are able to start utilizing crypto assets for finances. That will give the market space a little bit more boost. Everything comes back to the foundation, essentially, which is rules and regulations. So I did say a long time ago also that if you want to buy certain crypto projects, they haven't topped out. XRP has by no means topped out. XLM hasn't topped out. XDC hasn't topped out. HBAR hasn't topped out. There's a lot of crypto projects that haven't reached their price points yet. Now, you might be thinking to yourself, well, I brought XRP, for example, at $3. Now XRP is at $2.50. Well, you got to look at it like this. XRP is not a short-term project. And what $3 is still incredibly cheap, $4 is still incredibly cheap, so is $5. It's also incredibly cheap. If you're going for projects like XRP or XLM or XDC or HBAR, then you're not going for short-term plans, you're going for long-term plans. So if the price drops by 10 cents, is that really something you should be worried about? If the price drops by $2, then maybe you should be worried about it. Even if you want to buy more, be the smartest option, not financial advice in any sort of a way. But if you bought XRP recently or XLM recently or XDC recently or HBAR recently, and the price dropped by 10 cents, let's say, is that really a drastic drop? Is that something that you should be worried about, panicking about? Because as far as I'm aware, and everybody else is aware, if you're in projects like XRP, XLM, XDC, and HBAR and so on, those types of projects, why are you worried? They're all long-term projects. You shouldn't be worried in any sort of way. Every single one of those projects are long-term. Not a single one of them have ever topped out in any sort of a way. XRP has not topped out by a mile. XLM has not topped out. HBAR hasn't. XDC hasn't. I said a long time ago, Solana's too high for anybody to be purchasing it. To be fairly honest. Bitcoin is ridiculous for anyone to even think about buying it. I said that for the longest time as well. Even Ethereum. I said there's no point of buying Ethereum a long time ago. But I said other crypto projects haven't reached the price points they need to reach yet. Because again, we don't have rules and regulations. It just comes back to that main factor. We don't have rules and regulations. I said this on Friday as well. Because we don't have rules and regulations yet, we don't have the biggest boost factor inside the market space. So therefore, the market will be volatile. Now, you want to know something funny? The beloved Bitcoin, which is titled digital gold. Gold is up. Bitcoin isn't. Yet Bitcoin still, till this day, is given the title of digital gold. As I said also on Friday and weeks before, months before, I don't understand why Bitcoin maxis are given the title Bitcoin is digital gold when it doesn't react like gold. Gold is up. Where's Bitcoin in this instance? Oh, wait, Bitcoin's down. This is why I say people need to, and this is why I was on Friday telling everyone that stop, Bitcoin maxis especially, need to stop spreading rumors about Bitcoin and lies about Bitcoin and saying it's digital gold because it's not reacting like gold. Gold is up, Bitcoin is down. But ironically, Bitcoin is called digital gold. And there's no correlation between them whatsoever. And then again, it also doesn't act like a risk-off asset. But so, in factors of tariff situation still going on, then we have the situation of Bybit still going on. Then we have the situation of 4 American states rejecting a Bitcoin-only reserve. There were 21 American states that applied for a Bitcoin reserve or a crypto reserve. Only a few, about 3 of them, applied for a crypto reserve. The rest decided to go for a Bitcoin reserve. 4 of them have already been rejected for just a Bitcoin reserve. Because it goes back to what Trump signed, an executive order, which is an executive order. It didn't say the United States of America is going to create a Bitcoin reserve. No, it said they're going to create a stockpile, a digital asset stockpile. 4 American states, also on top of all the news that's going on, rejected a full-on Bitcoin, just Bitcoin reserve. It was North Dakota rejected it, Wyoming rejected it, and 2 other American states, which we're going to go on tonight's live and talk about as well, they rejected just a Bitcoin reserve. The same way Bulgaria was rejected just a Bitcoin reserve. And a few other essentially UAE countries, a few other essentially EU countries also were rejected just a Bitcoin reserve. It seems like the world is moving on from just a Bitcoin reserve to a much more open and widened space of a crypto reserve. But also the EU is still, on that mindset of CBDCs only. That's another argument there, another debate there. But on all the situations that's going on with the essentially the hacking situation of Bybit, that's still weighing in on the market space. So with the hacking situation of Bybit still weighing in on the market space, and the hackers have now split the $1.4 billion to $1.5 billion they stole of Ethereum into 57 wallets. Bybit is now offering essentially about $100 million+ for any white hat hacker that can get the money back. Then we also have Bybit freezing some wallet activity, so in case you get hacked again. We also have another safe wallet company that's just like Trust Wallet, who's also frozen some withdrawals as well because they're worried about getting compromised. It's not a good look for crypto. Then we also have weighing on the matter of the Libra token. The president of essentially El Salvador, that situation he created in Latin America, that's also made cryptocurrencies look bad, which he is now facing judges and law action, lawsuits, and so on. That's not making crypto look good in any sort of way either. Then we also have the Solana situation, which is particularly only for Solana related, but they're going to get a massive token release happening from FTX exchange. That's not good for Solana. Then we also have the other situation of Dogecoin, where apparently there's some rumors within Dogecoin there's going to be large sell-offs happening. We also have the other microeconomic events where gold is very, very strong and Bitcoin is very, very weak. Ironically, it shouldn't be, because Bitcoin maxis have always said to everybody, Bitcoin is digital gold. But yet again, Bitcoin has disappointed everyone because it doesn't react like gold. Not surprising in any sort of way, but some people might be shocked about that. That Bitcoin, yet again, has failed to fill in the shoes of the title that's being given as Bitcoin, essentially digital gold, when it doesn't react like gold in any sort of a way. And then we also have, as I said, the tariff situations, and also weighing on that matter, we have 4 American states that completely rejected a Bitcoin reserve and said there's no point of just doing a Bitcoin reserve in any sort of a way. Now, and also on the topic of buying the top, or are we entering into a bear market? Hell no, we're not entering into a bear market. We also have essentially a major firm based inside the United States, massive firm, based inside the United States, that have just declared today they want to enter into the crypto space. This is a billion-dollar firm out of Wall Street. They've just mentioned they want to enter inside the crypto space, and they want to back essentially President Trump's plan of America becoming a crypto capital. Massive firm, which we're going to go through on tonight's live as well. We also have all the other factors in play where Bank of America CEO is still ready for crypto to be advocated, activated inside the United States to be used for finances, and all the other positivity that's inside the crypto space. But all that positivity is still being overshadowed by the fact that we don't have rules and regulations, which is the main core of why crypto will remain volatile and follow, unfortunately, Bitcoin's lumpy footsteps, because we don't have rules and regulations. The longer the SEC and CFTC take to establish rules and regulation, a foundation for the United States to follow in suit, where institutions and banks know what areas they can go into crypto and what areas they can't, the longer they wait for that to happen, they're doing meetings back to back. And I'm not saying they're going very, very slow on their meetings. No, the SEC and the CFTC are actually moving incredibly fast. But again, we're just feeling the burn from the previous administration for doing absolutely nothing inside the crypto space, which led this administration, the Trump administration, to start from the ground up when it comes to crypto to get to here. Because the last administration did nothing for the crypto space. No regulations, just lawsuits. And because that's all they did, when we came to the new administration, which is Trump's administration, they're trying to still lay in the foundation. They're trying to still drop lawsuits back to back and then establish the rules and regulations and then bring more ETFs into the market space, or bring the ETFs same time as rules and regulations. But then again, it always just goes back to the core. The market space will be volatile unless we get regulations in place. The faster we get regulations, the less volatile it will become. I'm not saying once we get regulations, there's going to be no more volatility, no more volatile stages or more manipulation inside the crypto space. No, manipulation will always exist, and so will volatile stages, because you never know what can happen around the world. A war could break out any second, and the market will react in a negative way. But the faster we get regulations in place and utility starts, essentially working out inside the crypto space, the better we are, by a mile, by an absolute mile, the better we are. But if anybody out there is telling you we're in some sort of a bear market and this is it, full stop, everybody go home, they're deluded. Because how are we going to put aside the main factors of Trump? Still, these are the main factors, but they're all being overshadowed because of the hack regarding Bybit or the tariff situations or any other factors that are playing around right now in the world. But how are we going to overshadow the fact that the biggest country, the most advanced market space and the biggest market space in the world, signed an executive order by the president of that country to have essentially become America for the capital of cryptocurrencies? Massive positive, and it's been overshadowed still. We have the CFTC essentially and the SEC coming together after a decade to establish rules and regulations just for the crypto space. They're coming together after a decade. We have the SEC firing essentially 50 lawyers because they don't want to go into lawsuits anymore with the crypto space. We have the SEC dropping cases one by one, essentially. We have the SEC creating a crypto task force so they can establish rules and regulations faster. We have the FDIC essentially not stifling banks from working with crypto companies anymore. We have Jerome Powell, who's the chairman of the Fed, who's came out and talked positively about the crypto space and said that banks should be working with crypto companies. We have essentially the CEO of Bank of America coming out and saying, banks are ready for cryptocurrencies. We also have another positive news coming out today regarding Ripple signing another bank to their essentially list of banks that's going to be working with them. So the amount of positivity that actually is, and the CFPB and the OCC, they're all positively now, towards cryptocurrencies. All this major news hasn't went away in any sort of at all. It's still there. The executive order is still there. The CFTC and the SEC is still working together to establish the foundation of cryptocurrencies. The FDIC is still pro-crypto now because of Trump's administration. OCC is pro-crypto. CFPB is pro-crypto. Jerome Powell is pro-crypto. The man that hated cryptocurrencies and with his word he can move the market space now is very positive about crypto. None of these things have went away. They're still there. So if anybody's out there thinking to themselves, this is the beginning of any sort of bear market, you are absolutely deluded in all aspects, because all of those things are massive, but all those things aren't going to happen overnight in any sort of a way. Although the SEC is working tremendously fast to be, essentially giving them some sort of positivity, because the SEC has dropped, the first case they dropped was the Blockchain Association case, then they dropped the Kraken case, then they're dropping essentially the Coinbase case, and the next one that's pretty much left is the Ripple case. So the SEC is moving incredibly fast, to be fairly honest. They're not waiting for Paul Atkins to come in to establish some, serious regulations or drop lawsuits. They're moving as quick as they can without essentially an actual chairman, but just an acting chairman, which is Mark. So all those positive factors are still in play. So don't get sidetracked by noise in any sort of way. Don't get sidetracked by a hack that the Lazarus group did on Bybit. Don't get sidetracked by essentially the tariff situations, because they're positive in the long run. Don't get sidetracked by any sort of noise, because all the things that I just pointed out one by one are still there, and they're still work in progress. And they're not going away. They're just going to get better and better as long as the further we go along. The regulations will come out essentially the further we go along. The executive order that Trump signed, you'll see essentially the benefits of that executive order for America to become the capital of cryptocurrencies. You'll see that, the benefits of that, the longer we go along. So none of those things have went away. The market is still a good place to be in. Yes, certain crypto projects, as I said a very long time ago, I've been saying for the longest time, don't buy Bitcoin to everyone. It's too expensive to even bother thinking about Bitcoin. I said to people, don't buy Ethereum either. I said, don't buy Solana as well. I said, if you do want to go for some essential crypto projects, go for XRP, go for XLM, go for XDC, go for HBOL, go for Cardano if you want to, because they haven't topped out in any sort of a way, because they never got the chance to even top out. Ripple's been tied up in lawsuits since day one. So there's certain crypto projects that I've said for the longest time that you can still go for. They're still essentially very, very cheap for what they're going to become, especially if we go into regulations. The faster we go into regulations, the less volatile the market space will become. But again, none of those factors have went away in any sort of a way. Those factors are still in place. Executive order, CFPB, Fed chairman, SEC, CFTC come together after a decade. All those factors are still in play. And if you're somebody that out there that's, for example, brought XRP at $3, has now went to $2.50, you haven't lost much at all, because XRP is not a project to jump in and jump out of. It's a project that you're going for long term. Same goes with XLM, same goes with XDC, same goes with Cardano, same goes with HBAR, and there's a list of essentially crypto assets that you're going in for long term. So if you're a long time holder, then this is just noise, regular noise to you. But if you're essentially a short-term trader or so on, and you're getting liquidating your trades, well, that's a different situation, because you're always on volatile stages if you're a trader that's doing futures trading, for example. But if you're a long-time holder or a long-time buyer inside the crypto space, especially for financial projects, then this is just another Monday to you inside the crypto space. And by the way, this is the crypto space. We could go down 10% or 20%, and we couldn't care less, because we know in a few days we'll go back up in 10 to 20%. So keep that in mind. But all the things that have played out, I've said to everyone, a year ago, I told everyone, the more institutions, my exact words, the more institutions that come inside the crypto space, expect a lot more manipulation. My exact words, all of my lives, are recorded as they are now and posted automatically. I don't do any edits on my live. There are 0 edits on my live. So that nobody can ever say, oh, you edited this out, or you edited that out, or you never said this, you never said this. No. All of my lives are how they are now, and they're posted automatically without me even touching them. Every live that I did. And we're on episode essentially 268 right now. So there are 268 episodes that I haven't even touched with a single pound of edit. So a year ago, told everyone, the more institutions that come inside the crypto space expect a lot more expect a lot more manipulation, but also expect a lot more money. More institutions equals more manipulation and more money. Why more manipulation? Well, because we don't have regulations. The longer we don't have regulations, the longer the market's going to be like this. And Friday, I did tell everyone that essentially we don't have any good news inside the market space to push it to the right side. So the market's going to become volatile. And that Bybit situation didn't help essentially the situation we're already in inside the crypto space. But then again, it's just noise. Okay? My father always told me, one of the quotes that I've always used on this slide from my father is, don't look at the tip of your nose, look further. If you're looking at the tip of your nose, you're looking at the Bybit hike situation, you're looking at the Solana token releases, you're looking at the tariff situation, and some of them essentially macroeconomic events. If you look further than your nose, you look at the essentially Trump executive order for America to become the capital of cryptocurrency, the biggest market space in the world. You're looking at Chairman Jerome Powell talking positive about the crypto space and how banks should work with crypto companies. If you look further, essentially, than the tip of your nose, you're looking at the FDIC chairman essentially being positive towards cryptocurrencies. You're looking at the CFPB positive towards cryptocurrencies. You look at this SEC and CFTC come together after a decade. So don't look at the tip of your nose because it's just noise. Look beyond that. And when you look beyond that, you get the bigger picture. And the bigger picture is we're heading towards an incredible market space. So don't get essentially distracted by nonsense that's going on right now inside the market space to the bigger picture of the crypto space. And I told everyone a while ago, I've been telling everyone for the longest time, no point buying Bitcoin, no point buying Ethereum, no point buying Solana. I told everyone a while ago. I said, if you want to buy any sort of cryptocurrencies, no financial advice in any sort of a way, look into XRP, XLM, XDC, HPRO, and so on. Full stop. Because I said they're still incredibly cheap for what they're going to become. I said, don't look at Bitcoin or Ethereum or Solana. They're too expensive for what they are. And I revealed to everybody on Friday that institutions, and this was from JP Morgan, if anybody remembers the last episode I did, I talked about JP Morgan's analyst, Nicholas. And I said, JP Morgan's analyst, Nicholas, this Friday that just went, he said that institutions and Wall Street are no longer looking into buying Bitcoin and Ethereum ETFs, and they want better options. They want more alternatives. I said this to everyone. And as I said, my lives are not edited in any sort of way. They're recorded as how they are now and posted them automatically without me even touching anything. On Friday's live, I said, Nicholas, JP Morgan's analyst, top analyst essentially, stated that institutions are no longer looking towards Bitcoin and Ethereum ETFs, and they want better options. Well, we're about to get a lot of better options because there's a tremendous amount of ETFs that have applied for it. And the SEC has acknowledged some of them so far. There's a lot of positivity. So don't let essentially the distraction of noise that's happening right now inside the crypto space on the tip of your nose distract you from the bigger picture. Because all those things are still in place. It'll take a little bit of time, but they're still in place. Just want to inform everyone on that. So if you're somebody that's panicking, don't. This is the crypto space. We could go down 20% today. We'll be back up in a few days in 20%. It's the crypto space. This isn't a stock market. In the stock market, the market goes down by 3%. Everybody starts panicking. This is crypto space. We could go down by 20%. We couldn't care less. We'll be back up in 3-4 days, up 20% again. This shouldn't be your first rodeo inside the crypto space. So don't get panicky on anyone. Don't panic at all. This is just a regular Monday inside the crypto space. And if anybody tell you otherwise, it's the bear market starting and so on, then they're deluded, absolutely deluded. But as I said for the longest time, don't buy Bitcoin, don't buy Ethereum, and don't buy Solana. Solana's taken a very big hit today due to their token release coming from FTX. But Solana was too overpriced as it was. And I said to everybody a long time ago as well, and a few days ago as well, that I've stopped using Solana. because I got tired of my transactions not going through. But yeah, and Bitcoin was definitely overpriced. I said that for the longest time. I said never buy Bitcoin, never buy Ethereum, never buy Solana. So if you want to buy something or look into something, XRP, XLM, XDC, HBAR, they're cheap for what they are, incredibly cheap for what they are. Now, let's go inside the comment section, but remember, don't look at the tip of your nose, look further. Trust me, when you look further, you get the big picture. So when does anyone expect an upside for it? Soon, very, very soon. Few days. Good evening, Miles and CMF. Orphan, good to see you. How you doing? How you been? Miles, what's happening inside the markets? Are they trying to shake us out? Well, it's the as I said, the factors that's on place right now. The tariff situation, the Bybit situation is still weighing in. Then you have the Solana situation just related to Solana, the massive token release from FTX exchange. DOGE is feeling some sort of a pressure as well from some insider news that's happening within DOGE. Apparently it's going to be a massive dump, but then again, that has been confirmed in any sort of a way. Then you have the microeconomic events. Then you also have gold being strengthened by a lot, and Bitcoin reacting the opposite to gold. Ironically, even though Bitcoin is named digital gold, doesn't react like gold, never did, never will. But those are factors in play right now. Hello, Miles and CMF. Anna, good to see you. How you doing? Again, it just goes back to the foundation part. We don't have foundation yet. And so from the SEC and CFTC, but they are working incredibly fast, to be fairly honest. I mean, yes, nobody thought the SEC was going to essentially this soon in dismiss cases. I did, because a lot of people said, you know, they have to wait for Paul Atkins to come in and then they can essentially establish some rules and dismiss cases. I said, no, if the acting chairman of the SEC wants to dismiss cases, he's capable of dismissing cases. Turns out I was right again. The acting chairman of the SEC, Mark, did dismiss cases back to back, and we're pretty much getting to one case left, Ripple case. That's some good news as well. So those are the factors in play. And also what Nicholas said, JP Morgan's analyst, that institutions are losing interest in Bitcoin and Ethereum ETFs, and they want alternatives. And this was JP Morgan's analyst Nicholas, what he stated on Friday. This Friday I just went past that I revealed to everyone. Anna, good to see you as well. How you doing? Hello, Miles and CMF. Good to see you as well. Hi, Miles. Mickey, good to see you as well. How you doing? How you been? I'm ready to be shaken up. Johnny, how are you today, Miles? I'm doing great, Lena. Good to see you as well. How you doing? Hi, Miles and CMF. Stormy, good to see you as well. How you doing? How you been? Evening, Pure, good to see you as well. How you doing? How you been? Good evening, Miles and CMF. Callie, good to see you as well. How you doing? How you been? Hi, Miles and CMF. George, good to see you as well. How you doing? How you been? Happy Pisces, good to see you as well. How you doing? How you been? Greetings, Miles and CMF. Hope all is well. Ray, good to see you as well. How you doing, brother? How you been? Hello, Miles and CMF. Comatose, good to see you as well. How you doing? How you been? Happy Pisces, good to see you as well. How you doing? How you been? I just keep buying the dip. Let's go autistic. BTC falling to 91,000 plus. Let's go. Miles, do you still think XRP can do very good this year? I think it could do tremendously well this year. This year, case will drop. There's no reasons for the XRP case to continue any further, especially with a very pro-crypto administration that's in place right now, Trump's administration. Trump's essential administration is very pro-crypto. So there's a lot of pressure on the SEC to be very positive towards cryptocurrencies. So the case is getting dropped this year, without a doubt. Regulations should be established. A foundation should be established this year. Not, you know, a full foundation, but up to a certain extent, we should have some foundation laid in. So yeah, I do think it's going to be incredibly well this year. Still, 10 cents for 1,000 XRPs, $100. And when it reaches only $100 per XRP, you are ahead $100,000. Less than 100 plus your initial investment, and $100 loss. Drop will vanish into gains within days or hours. Not a casino. Facts. Let's go, Happy Pisces. Evening, Miles and CMF. Good to see you as well, Pierce. How you doing? How you been? Miles, what's your opinion on the company's stake being able to invest in property from £100 with other investors, then stake manage the sale for you, and you get paid for your dividends each month? I would have to look into it to give you a better perspective, just to see if stake is a genuine and legitimate company. They have any sort of licenses to be able to operate in that manner. Pierce, direct message, I'll take a look into it for you. No problem. Crypto slowly turning into dust. It isn't by any means. It isn't by any means. Few influencers are saying sell your crypto. Well, they're morons if they're telling anyone. If anyone's telling anyone to sell your cryptocurrencies, you're an absolute moron. It just shows that's your first time being inside the crypto space, and you don't understand everything else that's pretty much in play. Good evening, Miles and CMF. Mike, good to see you. How you doing? How you been? Good evening, Miles and CMF. Free Forever, good to see you. How you doing? How you been? Miles, can I do some shopping today or tomorrow? You can go shopping today and tomorrow, to be fairly honest. Pretend your back hurts and keep it keep it raw, please. I appreciate it. Let's go, Mickey. This is on my Coinbase account. Okay. Do you think BTC can drop as low as 72,000? There's a basically a debate, you can say, that's going around, an argument that's going around regarding Bitcoin, not with you, Walter, in any sort of a way, but just, you know, what I've been seeing on X and essentially other platforms, that Bitcoin could reach 76,000 or 72,000. The issue with that is you have somebody by the name of Michael Saylor, and then you have other companies that follow Michael Saylor's footsteps, like Metaplanet, which has become essentially the Japanese version of MicroStrategy over there. So whenever Bitcoin does any sort of drops, companies like Michael Saylor, who follow Michael Saylor's footsteps, like MicroStrategy's footsteps, end up buying Bitcoin straight away. So, and then you also have the factor of its ETFs that are keeping the Bitcoin market space up. I'm not the only one that said this before. It's Eric also, who's a Bloomberg ETF specialist analyst. And Eric has been very correct on the market space. Intelligent person, very intelligent person, Eric. And even he has said that what's keeping the market space up for Bitcoin, keeping its price up, it's the ETFs that's keeping Bitcoin up. And let's not forget, there's a lot of ETFs that are right now being used for collateral inside of Wall Street. One particular firm on Wall Street is handing out essentially Bitcoin loans to all these ETF Bitcoin holders on Wall Street, and they can use their Bitcoins as collateral. So there's also that factor in play. And also you have the other factor in play where Michael Saylor, or Strategy in other words, doesn't have to sell their Bitcoins until 2027 if he does want to sell off his Bitcoins, because that's when the borrowed money runs out, the convertible notes and bonds he's been borrowing against. So the argument of Bitcoin can reach $72,000. It's not that it can never reach $72,000. Bitcoin can reach $72,000. The issue with that is the companies like MicroStrategy who are just going to scoop up Bitcoin if it does ever reach anywhere near that price point. But then also, if that price point is going to be happening, you would probably need essentially BlackRock's clients that are holding Bitcoin ETFs to drop on the market space, to dump it on the market space. You would need BlackRock's clients to dump it on the market space, Fidelity's clients that are holding Bitcoin ETFs to dump it on the market space, and so on. Those factors essentially would have to be in play for Bitcoin to ever reach $72,000. So you would have to ask yourself, is BlackRock's clients going to be dumping on the market space? Probably not. Some might, but the majority won't. And even if they do, companies like MicroStrategy will just scoop it right back up again. MicroStrategy will scoop it up, or Strategy will scoop it up. Metaplanet in Japan, which has become the biggest Bitcoin holder essentially as a company on the public open market space, will scoop it up. Then you have a few companies in Canada who are also following Michael Saylor's footsteps and scooping up Bitcoin no matter what the price is. So on one side, you can have the dump happening, for example, by BlackRock's clients or Fidelity's clients or Grayscale's clients on the Bitcoin ETFs. But on the other side, you have companies like MicroStrategy who are just lining up to scoop it up. And they're not buying, 1 million, 2 million, 3 million. They're buying like 500 million, 900 million. So they're scooping up a lot every time the price does lower itself. So the debate or the argument of can Bitcoin reach $72,000, it's possible. The issue is one side, if they do start selling, the other side will instantly start buying. So reaching that price point, it's a very slim chance. It's possible, but slim. Because if one side starts selling, the other side will start buying. BlackRock's clients sell, MicroStrategy will buy. Fidelity's clients sell, Metaplanet will buy. You get the picture. So that's what the issue is with the debate of can it go as low as 72,000? It can, but when one side starts selling, the other side starts buying. And they buy a lot. As I said, 100 million, 200 million, 500 million, 900 million. Metaplanet is raising $975 million to buy more Bitcoin. Just a heads up. So there's that side as well. So people can throw out numbers as much as they want, but they have to look at who is the buyers and who are the sellers. The sellers are a bit stingy. They're not going to be selling, even if they do small amounts. But the buyers are very hefty. So in between, it's the retail section pretty much jumping out, to be fairly honest. So it's what I would say that essentially, can Bitcoin drop to 72,000? It's possible, but very, very slim chance, extremely slim chance, because of the factors in play, essentially. One side starts selling, the other side will start buying. For a fact, Michael Saylor is going to scoop that up. That guy drinks and sleeps Bitcoin and eats Bitcoin. Now, that's what I would say regarding that, Walter. What is your opinion on Pulse Chain? Pulse Chain? And run away from it. The best way I can put it for you. Run away from Pulse Chain. It was a scam when it started. It was started by a scammer. Originally, it was started by a scammer who disappeared when the FBI started looking for him. And it's still a scam chain and a scam project. It was started by scammers. It's a scam project. And the guy that created it disappeared into thin air. So run away from it as far as you can. Can the acting chairman withdraw the appeal against Ripple? No, it's not that he can withdraw it. They would have to go to the judge. So the judge will be the one to essentially not withdraw it, but dismiss the case. If both parties come to the decision to dismiss the case, then the judge will have to essentially be the final verdict of dismissing the case. The judge obviously isn't going to say no, continue the case, because there's no grounds if both parties want to essentially dismiss the case or come to some sort of a settlement, a reduced settlement, for example. But yes, in a way, the acting chairman can essentially withdraw the appeal against Ripple. Not withdraw the appeal, but dismiss the case or a reduced, essentially, settlement. But they would have to go to the judge for that to be able to happen. Good evening, Miles and CMF. Denise, good to see you. How you doing? How you been? But yes, Paul can do that. No, sorry, not Paul. Mark, the acting chairman of the SEC, can do that, yeah. Not in that way, but there's a different way you can do it. Now, for example, Michael Saylor, on the topic of Michael Saylor, he is trying to squeeze himself more into SEC meetings and high-profile executive meetings and so on to push the verdict of, to push the word of Bitcoin around. So it was essentially revealed that Michael Saylor has had discussions with the SEC's crypto task force. So here it is. In a noteworthy development for the cryptocurrency industry, MicroStrategy's founder and Bitcoin advocate, Michael Saylor, recently engaged in discussions with the U.S. Securities Exchange Commission SEC Crypto Task Force. This meeting, reported essentially by Watcher Guru, signals a proactive step towards establishing a clearer regulatory landscape for digital assets in the United States. But what does this essentially signify for the future of crypto, and why is Michael Saylor's involvement particularly significant? Michael Saylor, a prominent figure inside the tech and cryptocurrency sector, is best known as the chairman and co-founder of MicroStrategy, or Strategy nowadays. Under his leadership, Strategy became one of the first publicly traded companies to adopt Bitcoin as a primary, essentially, treasury reserve asset. This bold move has positioned Saylor as a leading voice in the advocacy for Bitcoin and the broader adoption of cryptocurrencies. His meetings with the crypto task force at the SEC is not just another routine between essentially, not just another routine or an encounter. It represents a crucial dialogue between a key industry leader and regulatory essential authorities. Saylor's deep understanding of the cryptocurrency market, coupled with his company's significant investments in Bitcoin, provides him with a unique perspective on the challenges and opportunities facing the digital asset sector. His engagements at the SEC Crypto Task Force is likely aimed at fostering a more informed and balanced approach to regulations, potentially paving the way for innovation while ensuring investor protection. Michael Saylor's essentially meetings with the SEC's Crypto Task Force marks a significant moment in the ongoing evolution of cryptocurrencies between industry leaders and regulatory bodies in shaping a balanced and effective regulatory framework. As the digital asset space continues to mature, which it is, a strategic essentially engagement, a crucial for fostering innovation while ensuring investor protection and market integrity. The insights exchanged in this meeting between Michael Saylor and the SEC's Crypto Task Force, that is Hester Pierce in charge of it, in this meeting could essentially pave the way for more constructive and forward-looking approaches to cryptocurrency regulations, ultimately benefiting both the industry and the broader financial ecosystem. The development of a clear, essential, and comprehensive digital asset framework remains a key priority, and that Michael Saylor's involvement signals a very proactive step towards achieving this goal. The future of crypto regulation is being shaped through these critical decisions, and the industry will be kneeling essentially and watching for the outcomes to play out. There's a lot of things that need to be played out from the SEC and CFTC, and mainly this to do with the foundation of cryptocurrencies, the regulation part. But obviously, seeing the cases being knocked out the park one by one, they're just getting dismissed. The Blockchain Association case was first, and then essentially the Kraken case, and then the Coinbase case, and so on. One by one, they're all getting knocked out the park, complete dismissals, and then that just pretty much just leaves us with the Ripple case, the main case of the crypto space. But that's also going to come to an end very, very soon. It cannot be carried on forward in any sort of a way. If you're wondering to yourself, why is the Ripple case taking the longest to dismiss or settle? As I said previously, the SEC is moving on the time frame of whose court date is coming up first, is how they're basing on how they're going to close these cases. So we had the essentially Blockchain Association case straight up dismissal because there was no point even going forward. For the Coinbase cases, court date was coming up, so they had to dismiss that going forward and so on. So they're basing it on whose court date is coming up first is the next case we're going to work on to come sort of an agreement of dismissal or essentially settlement. Now, regarding the Ripple situation, it's obviously going to be either a dismissal or it's going to be reduced essentially penalty for a settlement to be happening so everyone can move forward and walk off into the sunset. But regarding Michael Saylor, as I said previously, he's just going to scoop up more Bitcoin. Him having conversations with the SEC, even though he is a Bitcoin maxi, it's still a positive for the crypto space. Now, moving on essentially from Michael Saylor to Grayscale. Grayscale has decided to create an AI fund. Now, Grayscale is been ahead of the game for a while. They were the first ones to essentially sue for a Bitcoin ETF for it to be a possibility of even happening. They were the first ones to create a basket of ETFs collectively, like Bitcoin, Ethereum, XRP, Solana, Cardano, AVAX, all these cryptocurrencies into one basket of an ETF. So they were the first ones to do something regarding crypto space and bring it to the traditional market space. And now they want to bring something else to the traditional market space, which is an AI fund, essentially that's been unveiled for accredited investors. Before we go through that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it down inside the comment section. I'll be more than happy to answer any questions you may have. So let's see what's going on inside the comment section, and then we go straight into the AI fund from Grayscale. Good evening, Miles and CMF. Denise, good to see you. How you doing? How you been? Miles and CMF. Davey, good to see you. How you doing, Davey? How you been? Hello, Miles and family. Carlos, good to see you. How you doing? How you been, Carlos? So, revolutionary fund, Grayscale. Grayscale is essentially a revolutionary fund that they've essentially created, is going to give the option of coming together for joining the AI space, the crypto AI space, essentially slowly to the traditional market space. Now they're only offering to essentially accredited investors, not to essentially any retail essentially clients walking in through the door that want to be a part of this fund. But slowly, what Grayscale is going to do is probably turn this into an ETF, an AI ETF. Why would I say that? Well, because every time Grayscale creates some sort of a trust or a revolutionary fund, it does turn into an ETF. They created a Bitcoin trust, which then turned into a Bitcoin ETF. They created an Ethereum trust, which then turned into an Ethereum ETF. They created an XRP trust, which then essentially turned into a essentially XRP ETF. They created a HBAR trust, which then turned into a essentially HBAR ETF, a filing of an ETF. So what I am trying to say is that slowly, Grayscale is about to be working its way into the AI field. And we could be seeing Grayscale naming out AI crypto projects for ETFs sooner or later. Who knows? But they haven't mentioned any yet, but they're going to probably down the line. Now, moving off essentially Grayscale to Dubai. Dubai has officially recognized Circle's USDC and EuroC as legal stablecoins, which is massive news. That two particular stablecoins are now legal tender in Dubai. And one of them is picking up in essentially the Eurozone, which is essentially EuroC, which is USDC's version of essentially Circle's version of a Euro stablecoin. And because USDT is completely kicked out of the EU market space, Circle has been able to take their piece of the pie, you could say. So here it is. Dubai has officially recognized Circle's USDC and EuroC as legal pretty much tender, marking a significant leap forward for digital assets adoption in the region and globally. This is all positive news for the crypto space, but again, it's been overshadowed by absolute nonsense and noise regarding the hacking situation of Bybit or any other matters that are in play, the macroeconomic effects. This groundbreaking decision positions Dubai as a pioneering hub for regulated cryptocurrencies and transactions, potentially paving the way for a wider institutional involvement and consumer trust in digital economies. Dubai's move to legally recognize stablecoins, especially essentially USDC and EuroC, is not essentially just a local update. It's a powerful signal to the global financial community that's stablecoins are here to stay and they can be used as legal tender. Now, regulatory clarity, for example. For too long, the regulatory landscape for cryptocurrencies has been very up and down. And Dubai's explicit recognition provides much needed clarity, particularly for businesses and financial institutions who are hesitant to engage with digital assets due to the legal uncertainties. This clarity can unlock significant investment and innovation. Goes back to what I said, the faster we get rules and regulations in the United States by the SEC and CFTC, the faster we can move forward and the less the market will be volatile, because when we have rules and regulations, utility can start happening. And institutions know what line to cross or what line not to cross, and banks will know the same thing of why to cross or why not to cross. Essentially what Dubai is trying to establish itself. Dubai is trying to open the floodgates for stablecoins and cryptocurrencies and become a very regulated hub, which is something that America is still aiming for. They're not that far off, to be fairly honest, but they're still laying in the foundation. Institutional adoption and the catalyst. Financial institutions often require regulatory certainty before diving into new asset classes. With Dubai's regulation now explicitly supporting USDC and EuroC, expect to see increased interest and adoption from banks, investment firms, and other traditional financial players in the region. These are things that's happening in Dubai. These are things that can also happen inside the United States. Do you know when? When they bring out the rules and regulations from the SEC and CFTC. Global standard settings. Dubai is known for its forward-thinking approach to technology and finance. By taking a proactive stance on stablecoins, Dubai sets a precedent for other jurisdictions worldwide. This move aligns Dubai with the regions like the EU and Canada, signal a growing essentially global consensus on legitimacy of regulated digital currencies. Even Canada came out and said, essentially last Friday I revealed, Canada's main bank, essentially their centralized bank, came out and said that Canada needs to move faster than ever before regarding the digital asset space, because Canada feels like it's about to get left behind from the digital space, the blockchain space, the crypto space, because they said America is taking footsteps after footsteps, entering this digital world, and Canada's getting left behind. We're still moving to a very positive crypto market space. It's just there's so much noise that the positivity has been completely overshadowed by absolute nonsense. Boost for crypto ecosystems. Legal recognition enhances the credibility and usability of stablecoins. This can fuel growth across the entire crypto ecosystem, from decentralized financial applications to everyday transactions, as trust and confidence in these digital assets increase. Dubai's legal recognition of stablecoins is a strong indicator of the direction essentially in which the digital finance is heading. This move signals essentially a broader acceptance of cryptocurrencies within regulated frameworks and highlights the growing importance of stablecoins in the digital economy. Dubai's proactive stance positions as a leading hub for crypto innovations and investments. As other jurisdictions observe Dubai's approach, we can expect to see further advancements in stablecoin regulations and adoption globally. This is more than just an approval. It's a clear message that Dubai is embracing the future of finance and is committed to fostering a regulated and innovative digital asset ecosystem. The recognition of USDC and EuroC is a testament to the maturity of the stablecoin market and a significant step towards mainstream crypto adoption. News like this helps American politicians move faster on essentially establishing a stablecoin rule or stablecoin act, which the last act they essentially tried to pass or still are working on passing is the Genius Act for stablecoins. But with countries like essentially the United Arab Emirates, Dubai, United Arab Emirates, UAE, with countries like essentially the United Arab Emirates pushing further and further inside the crypto space to make stablecoins legal tender, bring out the regulations, establish a foundation, and makes countries like America or America's politicians go, we want to become the capital of cryptocurrencies. We got to be faster than them. I love this. I love this essentially back and forth that countries are having right now of who's going to be first to the finishing line. Because as I said, Canada's main bank, the Central Bank of Canada, even coming out and stating they're falling behind, it shows that they want to be ahead of the game as well, just like any other country. South Korea wants to be ahead of the game as well. So does Japan, so does Singapore, so does Hong Kong, and the list goes on. But Dubai is really making headlines, and it's massive. It's massive for the crypto space. It's an absolute positive for the crypto space. But yet again, it's being overshadowed by absolute nonsense and noise inside the crypto space. Now, on the topic of Bitcoin reserve, just Bitcoin reserve. So we have two options. We have the crypto stockpile and what the Bitcoin maxis are begging for, just a Bitcoin reserve, which is a very selfish thing to ask for in every single aspect, because they just want it for themselves, but they actually just, try to play it out as if, Bitcoin is some savior to the world. That's no here, no there argument. But just a Bitcoin reserve was rejected from American states. 21 to 22 American states have all applied for some sort of a Bitcoin or a crypto reserve. And well, here it is. And I said it's a stupid idea just for a Bitcoin reserve. Just a Bitcoin reserve is a stupid idea. It's a selfish idea. Because if the idea is to use cryptocurrency to provide liquidity and essentially help American states or help countries with their massive debt, then just a Bitcoin reserve is a stupid idea. A crypto reserve is what's going to help countries, fix their debt issues rather than just a Bitcoin reserve by a mile. So I've always said the Bitcoin reserve idea is a stupid idea. A crypto reserve is a brilliant idea. And I said this before the executive order was even signed by Trump, which I'm happy that Trump signed an executive order for a digital asset stockpile, rather than just a Bitcoin reserve. But anyways, South Dakota's lawmakers effectively kill the proposed Bitcoin bill, which some Bitcoin maxis might not be happy about this, but who cares? Lawmakers in South Dakota's legislators deferred a vote that could have allowed the U.S. state to invest in Bitcoin, effectively killing the bill. The meeting of the essentially state's House Commerce and Energy Committee, the majority of lawmakers voted to defer the HB 1202 to the 41st day of South Dakota's legislative sessions. Because the legislators has more than 40 days in session, the motion effectively killed the current version of the bill, which proposed permitting the state to invest in Bitcoin. The proposed bill would have amended the classification of South Dakota's state public funds to include up to 10% in Bitcoin's investments. State Representatives Logan, essentially Manhart, who introduced the bill on January, and similar bills essentially establishing Bitcoin reserves have also failed. Just a Bitcoin reserve, to clarify again, this is not for a crypto reserve, just a Bitcoin reserve, has also been completely, essentially, failed. I'll tell you which states now. So similar bills establishing a Bitcoin reserve have failed to pass in some state governments, including North Dakota. It didn't pass for just a Bitcoin reserve. Montana didn't pass just for a Bitcoin reserve. Wyoming didn't pass for just a Bitcoin reserve. However, lawmakers in Florida, Arizona, Utah, Ohio, Missouri, and Kentucky have introduced legislations that at the time of publication was still moving through local government. So we still have to wait for their responses. But I know that Utah, for example, has created a crypto reserve, not a Bitcoin reserve. Now, most of the state level efforts to establish a BTC reserve or invest in crypto followed the US President Donald Trump's, who campaigned to create a strict national, essentially, stockpile, a digital asset stockpile. Executive Order Trump proposed forming a working group to study the potential creation of the essentially maintenance of the US crypto stockpile. However, many of the president's essentially executive orders have faced legal challenges due to claims of essentially unconstitutional. But judges can go up against Trump as much as they want. They're all going to lose one by one. Since Trump took office on January 20th, the administration and government agencies have suggested they essentially intended to pursue a different approach to digital assets than that of the former president, essentially Joe Biden. The US Securities and Exchange Commission has already dropped investigations into some crypto firms and even reportedly closing against crypto exchange Coinbase, which filed on their lawsuit back in 2023. Now, so just you can know, the Bitcoin maxis have been pushing for a Bitcoin reserve for the longest time. It was a stupid idea. A crypto reserve has always made a lot more sense by a mile. And 3 American states have already rejected the idea of just a Bitcoin reserve. The reason why I'm saying just a Bitcoin reserve is because they haven't applied for a crypto reserve, but they only applied for a only Bitcoin reserve. And it was completely rejected. Now, there are other states in play. They're essentially still going in through filings. Let's see how those plan out. But Utah, for example, I know that they essentially applied for a crypto stockpile, not a Bitcoin reserve, which is amazing that they applied for a crypto stockpile. A lot more, intelligent movements. Now, on the topic of what I said before, there are still massive, and I mean massive, American firms lining up to buy or enter inside the crypto space. As much as people want to tell you it's the bear market, everything's going to go down, everybody go home, and so on, there are still massive Wall Street firms lining up to enter the crypto space. Ken, for example, Seattle Security wants to be a crypto liquidity provider. Ken Griffin, Seattle Security plans to become a liquidity provider, meaning it will start trading cryptocurrencies on major exchanges like Coinbase and Binance, according to a Bloomberg report, is what was released today. Seattle, a massive firm, billion-dollar firm, just came forward and said they're going to start trading cryptocurrencies on Coinbase and Binance. And this is coming out from Bloomberg. So it's not some random, essentially, news journalist. No, this is Bloomberg. Seattle, essentially, Seattle stayed away from essentially crypto for years because the regulations sucked. But now the President Donald Trump is making America the capital of cryptocurrencies on the planet. They think it's safe to jump in now. So here's the interesting part. Crypto influencers are telling people, some crypto influencers, are telling people to pack your bags and leave from the crypto market space because we're about to go, drastically dropping downwards to who knows when. And that, everybody needs to panic sell and jump out before the ship sinks, is what some crypto influencers are telling people. And now on the other side, you have a billion-dollar firm who's came out and said that, in their words, Donald Trump is making America Donald Trump is making America the crypto capital of the planet, and they think it's safe to jump in now. So a billion-dollar firm in Wall Street thinks to themselves, it's safe to jump in now, while people are telling people inside the crypto space to jump out. Do you see the dilemma situation where institutions, billion-dollar institutions, are thinking to themselves, it's safe to jump in now, when people are telling people inside the crypto space to jump out? Seattle plans to kick things off by setting up a crypto market, making teams overseas first. Why outside the US? Because the regulations at home still aren't clear enough. As I said previously, the SEC and CFTC need to lay the foundation in, so less volatility inside the markets, and move forward finally. So that's why Seattle is going to be going outside the US, setting up and coming in and start buying. Because the regulations at home still aren't clear enough, even though Trump is pushing for a pro-crypto agenda. FTX's crash, for example, showed everyone how dangerous mixing essentially market making, custody, and trading could be. So Seattle's Schwab and Fidelity built their own crypto exchange. That's massive. Seattle, Charles Schwab's, and Fidelity coming together, creating this massive platform to enter the crypto space through Coinbase and Binance now, while people are thinking to jump out now. EDX markets, which essentially opened last year, but of course only institutional traders can get in. But now that Trump's administration has already issued an executive order telling regulators to clean up their crypto mess left by Biden's people and create a national digital asset stockpile, things are finally looking up. Trump's appointed SEC commissioner, Hester Pierce, famous essentially for liking crypto, to run a special crypto task force, and also made David Sachs the White House crypto Caesar, who is essentially now busy elevating if America could start its own crypto reserve. Wall Street's biggest banks, who previously wouldn't touch crypto with a 10-foot pole, suddenly want to handle IPOs. I revealed this to everyone last week. Wall Street, who, in their words as well, didn't want to touch crypto with a 10-foot pole. Wall Street firms, billion-dollar to trillion-dollar firms, didn't want to touch crypto with a 10-foot pole. Last week, they were all singing a different tune. And do you know what song they were all singing on Wall Street? That they're in favor of helping out blockchain firms going public. Wall Street companies who didn't want to touch cryptocurrencies with a 10-foot pole are waiting in line in their own words to help blockchain companies go public. Help them go public. They want to help Circle go public. I'm guessing they want to help Ripple go public. They want to help essentially Kraken go public, Crypto.com to go public. You see the bigger picture here? This is why I say people need to stop looking at the tip of their nose and look further. Convertible bonds and crypto-related share sales. That's what they want to get involved in. Wall Street, who didn't want to touch crypto with a 10-foot pole, wants to get involved in helping crypto firms set up IPOs, convertible bonds, and crypto-related share sales. Morgan Stanley is out there right now calling crypto companies, trying to line up initial public offerings. Do you realize how massive that is? Morgan Stanley is lining up crypto companies, calling and lining up crypto companies to help them go public. Bank of America is doing the same thing. Their top investment banking executives are sitting in meetings talking about how they could score huge fees of crypto deals. Even Bank of America, top executives sitting around in essentially backdoor meetings, thinking to themselves, which crypto companies can we help to go public? Again, Bank of America, Wall Street, none of these people wanted to touch the crypto space. But now look at them. CEO Brian, for example, straight up admitted, Bank of America CEO straight up admitted, saying banks will come in hard on transactional side as soon as the regulations clear up. As I said previously, the faster the SEC, CFTC lay in the foundation, the regulation part of crypto space, and that's when we'll see a lifetime of up, pretty much on utility projects. I said the cases for the SEC closing down, it's a boost. The Ripple case closing down, it's a boost. But what's going to be the biggest boost by a mile for the market space in general? It's rules and regulations from the SEC and CFTC. The faster they bring out the rules and regulations, the better we'll be off. And they're not that far off. They're dropping cases one by one, laying in the foundation and acknowledging the ETFs, essentially the altcoin ETFs. But as you can see, the CEO of Bank of America also saying that banks will be coming in hard on the transactional side of cryptocurrencies as soon as the regulations clear up. Royal Bank of Canada also started handling convertible bond sales for Bitcoin's mining companies, Core Scientific. Other banks like the Jefferies, JP Morgan, Cantor Fitzgerald, and Moelis & Co. have also been quietly working behind the scenes with crypto companies, getting ready for IPOs. Crypto companies like Circle, Kraken, and Gemini all want to go public. Even HSBC, traditionally boring and safe, just upgraded one of their senior Forex strategists, giving him the new title of Head of Digital Assets. HSBC has a Head of Digital Assets now. These are all indications of what? The market's about to go into a bear cycle? No, these are all indications of the market's about to absolutely blast off. The crypto IPO market was basically frozen under Biden. Regulators pressured banks to pause crypto deals completely, stopping essentially several IPO plans dead in their tracks. Coinbase's Direct, for example, listing back in 2021, was basically the last big deal banks touched. Goldman Sachs, JP Morgan, Allen & Co., Citigroup worked on that deal together to bring Coinbase into the scene. back then. But now, however, Morgan Stanley wasn't on Coinbase's IPO back then, but they did help them sell convertible bonds later on. To date, the capital rising businesses by essentially crypto firms from IPOs and equity offerings to convertible bonds has gone to a fairly regular gamut of leaders and lenders. Though the largest investment bank has been selective, to the highest essentially profile publicly traded company in the crypto, it remains Coinbase Global Inc., with Goldman Sachs Group, JP Morgan Chase and Co., and Allen & Co. and Citigroup working essentially on the much hyped direction. Jefferies Financial Group is also active on crypto essentially deals, advising bullish on essentially its potential listings along with JP Morgan. It's also among banks working with Figure Technologies, the financial technology firm co-founded by former SoFi essentially Technologies Inc. head Mike. On an IPO, Bloomberg reported essentially Molly's & Co. and Captain Fixcon are among the firms active in the space as well. That happened essentially back in 2023 when they mentioned it for the first time ever, but everything else was this year, and it was last week they mentioned it. And it isn't going away. Morgan Stanley is calling out and lining up. Morgan Stanley is lining up blockchain companies to go public. What's that? Is that a sign of a bear market starting? Bank of America executives having meetings to see which companies they can push inside the blockchain sector to go public. What's that? Is that a bear signal? No. The list of establishments and institutions that I've just called out, or essentially even Citi, coming together with Charles Schwab's and Fidelity, launching their platform off to start trading on Binance and Coinbase. Is that a signal for a bear market? No. And if anybody tells you otherwise, they're absolutely deluded. I mean, this is why I keep on saying, stop essentially getting distracted by just absolute nonsense. So what Bybit Exchange got compromised for $1.5 billion? Who cares? It was Ethereum only. Who cares? I'll be honest, this is the crypto market. We move fast. So what, there's tariffs going on. Tariffs are actually a good thing in the long run. Short-term volatility, positive for long-term. And the scenarios of wars are always going to be happening either way. But again, faster we get rules and regulations, the better it is. Always look at the positive that's happening right now inside the market space. All the positive that I've essentially mentioned. Banks are lining up. Wall Street is lining up. That's not a signal for a bear market. If Wall Street that didn't want to touch crypto with a 10-foot pole, Wall Street didn't want to touch crypto with a 10-foot pole, is now helping and lining up, Morgan Stanley lining up essentially crypto firms to go public. Is that a signal for a bear market? Morgan Stanley lining up essentially blockchain companies to help them go public. Is that really a signal for a bear market? No. Bank of America, signal for a bear market? No. Were their executives getting involved inside the blockchain sector? Is that a signal for a bear market? No. Wall Street, is that a signal for a bear market? No. They're all signals for a massive blast off. But it's just you're too distracted with what's happening on the tip of your nose, which is Bybit Exchange, $1.5 billion, Solana's getting token releases, all the small microeconomic factors that are happening around the world, all the tariff situation is going to end very soon. And you're not looking at the bigger picture, which is Seattle saying it's safe to jump in. Billion-dollar firm saying it's safe to jump in for them. Not for you, for them. But what does that tell you? So look at the bigger picture. Executive order, America becoming a capital of cryptocurrencies. Wall Street didn't want to touch crypto with a 10-foot pole, is now lining up to help crypto companies. Morgan Stanley lining up, Bank of America lining up. The list goes on. So none of these are signals for a bear market in any sort of a way. If anybody tells you yes, they are, then you must be deluded. Because a billion-dollar firm saying we're ready to jump in is not a bear signal. It never is. It never will be. On top of all of that, Canary Capital has also ignited the ETF race with a bold 19B4 filing for a H-bar, essentially, ETF as well. So on top of all of that, Wall Street is sneakily moving its way up. Say that Seattle is sneakily moving its way up. Bank of America is moving up. Morgan Stanley is moving up. JP Morgan is moving up. And then you have essentially, the H-bar ETF, another one essentially from the ETF market space. This time around, Canary Capital. Digital asset managers are making notable moves to get as many tokens as possible approved for exchange-traded funds, ETFs. And as I said, revealed last week to everybody, Wall Street, Bank of America's analyst, Nicholas, said that Wall Street is tired of Bitcoin and Ethereum ETFs and they want options. Well, they're about to get a hell of a lot of options because the SEC is acknowledging those ETFs now. So the digital asset managers are making notable moves to get as many tokens as possible approved for ETFs. The latest in this trend is the Nasdaq stock market has submitted a 19B4 filing for the US SEC on behalf of Canary Capital. Notably, the filing is a spot HBAR ETF, HBAR essentially the native token of Hedera, a decentralized public network that uses the Hashgraph consensus algorithm to facilitate fast and secure transactions globally. Interestingly, the crypto investment firm was the first to file S1 registration for the Canary HBAR, essentially HBAR ETF. If approved, the fund will provide institutional investors exposures to the value of HBAR. Regarding ETF approvals, 19B4 filings is the second stage, essentially a two-step process when proposing a crypto ETF to the United States regulatory body. Canary Capital will essentially have to wait acknowledgements from the SEC and will know what the filings published with the Federal Register. According to the filings, the Hedera's network's principle aims to not to operate a payment system or to store value, unlike the publicly traded such a distributed ledger technology, DLT networks. A cryptocurrency must operate seamlessly and prompt network's consensus behavior. An analysis of the filings chances, Eric, who's the Bloomberg ETF specialist analyst, noted that among the recent filings, HBAR and Litecoin have very great odds of becoming ETFs as well. Now, on top of all of that, another positivity for the crypto space, but then again, it's also being overshadowed. Relief for Robinhood crypto. SEC investigation ends with no action. Is that a signal for a bear market? The SEC investigation ends with no action on Robinhood. Is that a signal for a bear market? No. Robinhood crypto users and the broader crypto community in a significant development. The US Securities Exchange Commission, SEC, has officially closed its investigations into Robinhood's crypto essentially operations. When the SEC launches an investigation, it casts a shadow of uncertainty over involved essentially entities. In the case of Robinhood's crypto, the investigation stemmed from concerns about potential securities laws and violations mirroring essentially previous acquisitions against Robinhood's brokerage services. So when Gary Gensler was suing essentially Robinhood, they were saying they were selling securities, which was trying to create some uncertainty for the market space. And now that this case has been dismissed, all the tokens that were listed as securities are no longer securities. However, the conclusion of this investigation with no action is a critical outcome. It essentially means that after essentially a through-on-through review, the SEC has decided not to pursue any enforcement actions against Robinhood's crypto essentially regarding the investigated matters. This is not an extortion in essentially legal sense, but strongly suggests that the SEC did not find sufficient evidence to warrant essentially these charges. And to understand the significance of this, no penalties or fines. Robinhood crypto will not face any financial penalties, fines, or other essential preventive measures from the SEC's related to this specific investigation. Is that a signal for a bear market? No. No cease and desist orders. The SEC will not issue any orders requiring Robinhood crypto to halt any of its current crypto regulations. Reduced regulatory uncertainty. This decision provides Robinhood crypto with greater clarity and reduces the regulatory uncertainty that often stifles innovation and growth inside the crypto sector. Is that a signal for a bear market? No. Positive market signals. The market often reacts to positivity, such news, as it can be interpreted as a sign of easing essentially in terms of pressure, at least in this particular instance. The SEC's decision to conclude its investigations into Robinhood's crypto without any enforcement actions is undoubtedly a significant win for the platform. It removes a major overhang of regulatory uncertainty and allows Robinhood crypto to move forward with greater confidence. While the broader landscape of crypto regulations remains complex and evolving, this episode offers a potential glimpse of more nuanced and perhaps less overtly aggressive approach from the SEC in certain cases. For the crypto community, this news can be seen as a positive signal, fostering hope for more balanced and innovation-friendly regulatory environments going forward. And the implementations of this no action decision will likely unfold in the coming months, shaping the trajectory of the Robinhood crypto and potentially influencing the broader regulatory environments. Now, is that essentially a signal for a bear market? Hell no. Now, before we go to the next news, let's go inside the comment section first. This is why I keep on saying to everyone, stop looking at the tip of your nose. The tip of your nose is tariffs, Bybit exchange getting hacked, and token releases. Beyond the tip of your nose, executive order, Wall Street getting involved, Seattle getting involved in trading crypto assets, and Binance and essentially Coinbase, Bank of America getting ready to help crypto companies go active and essentially public, Morgan Stanley lining up crypto firms to go public as well, Seattle thinking this is the perfect time for them to jump inside the crypto space. This is what's happening when you look beyond the tip of your nose. Or any of those signals for bear markets? No. Now, before I read on more, let's go inside the comment section first. As I said previously, this is a live, which means if you do have any questions, put it down inside the comment section. More than happy to answer any questions you may have. So let's go inside the comment section first, and then we go straight into the next news again. Let's see where we're at. We were at here. Hello, Miles. So I'm happy. Let's go inside the comment section first. Hello, Miles and CMF. Glad to be in touch with family, love and respect. Scott, good to see you, brother. How you doing? How you been, brother? Hello to my CMF on YouTube. Scott, let's go. Share the live. Let's go. By the way, thank you so much to everybody that retweeted this live, liked this live, put a comment outside the live, hashtag the XRP family. And thank you so much to everyone on YouTube who's liked this live as well. So CMF, thank you so much to everyone that's liked this live as well. I forgot to mention at the beginning, but I'm mentioning it now. Honestly, thank you so much to everybody that retweeted this live, liked this live, put a comment outside the live, and essentially hashtag the XRP on me as well. Now, let's go back in. Miles, can any country bring in any regulations ahead of the rest of... So Free Forever says, Miles, can any country bring any regulation ahead of the rest if all regulations need to be standardized, just like aviation has one universal language worldwide, unless it's already decided? Yes, but if some countries have the regulations in place, for example, if the United Arab Emirates has regulations, Bahrain has regulations, Kuwait has regulations, Qatar has regulations, then they can collectively work together and wait for the rest of the world to catch up. They don't need to stifle themselves waiting for the rest of the world to catch up in any sort of a way. So if Hong Kong establishes regulations, Singapore establishes full-on regulations, Japan establishes regulations, and all the Middle Eastern countries, Bahrain, Kuwait, Qatar, Saudi Arabia, United Arab Emirates, they establish regulations as well. They can technically work together essentially internationally, and there's nothing stopping them doing that. So they can wait if they want to, but in most cases they won't be waiting because it doesn't look like Dubai slowed down any sort of a way. They're speeding up, in fact. So they can work together if they want to. The same way I said that we don't have to wait for Chairman Paul Atkins to come in for the SEC to dismiss cases. I said the current acting chairman, Mark, can dismiss cases if he wants to from the SEC, and he has been doing, and he isn't waiting for Paul. Waiting game is pretty much over. Everybody wants to move faster. So if any countries do collectively want to work together and they have the right rules and regulations in place for international payments to be happening, then they can do if they want to. That will put more pressure, in fact, on more countries to join in even faster. The same way, as I said, Canada, Bank of Canada is thinking they're getting left behind. Situations like that will put more pressure for the world to move faster than ever before. Especially put a lot of pressure on America because it wants to become capital cryptocurrencies to move even incredibly fast. It put pressure on Trump, which Trump will then alleviate that pressure on the SEC and CFTC to move a hell of a lot faster. So they don't have to wait for everyone. They can start working together. Elizabeth Warren lost her power over SEC, but she's still a pest. I hope she goes to jail. Same. Elizabeth Warren, Senator Elizabeth Warren, my opinion, definitely needs to be looked into because her wages and her portfolio doesn't add up. The maths just doesn't add up there. When the banks make it look like crypto is their idea, yeah, I know it's about to go parabolic in terms of acceptance to Main Street and its price. Yes, facts. Sounds bullish to me. Let's go, JP. Can't read the chat. Well, it's pretty interesting. Wait, it's pretty interesting. I Aldous, if you can't read the chat on YouTube, some people have difficulty reading the chat on YouTube. It's a genuine thing. Some people have it's because of the way it's shown on the live, the chat on YouTube. So if you're having difficulty reading the chat on YouTube, this live is also being aired on X. Go to X, the comment section looks a bit more clear, and you can read the chat if you want to. Thank you, Miles. No problem, free verbal. Now, critical developments. Actually, you know what? Let's just go. Let's go in and out for a second. And what I mean by in and out is this. President Trump. President Trump asked Elon Musk to be more aggressive on DOGE in terms of the Department of Government Efficiency, in terms of their cuts. And Musk has responded, and the federal employees are in trouble. So President Donald Trump has asked Elon Musk to intensify his cost-cutting measures within the federal government, prompting the billionaire to be more aggressive in reducing wasteful expenditure and efficiencies in American government. Trump's comments were made essentially on Saturday on Truth Social, where he praised Musk's work at leading the Department of Government Efficiency, but insisted that more needed to be done in essentially stopping politicians in America from stealing taxpayers' money. Elon is doing a great job, Trump said, but I would like to see him get more aggressive. Remember, we have a country to save, but ultimately to make a greater than ever before. Mega, Trump wrote. Within hours, Elon Musk responded on X, writing, "Will do, Mr. President." According to Fox News, Trump's federal working program reconstructing began on his first day back in office on January 20th, when he signed an executive order requiring all federal employees to return in person to work as soon as essentially is feasible. The order instructed department heads to dismantle remote work arrangements and mandate essentially full-time office attendance. The queries escalated over the weekend when Musk's DOGE team emailed federal research employees demanding a detailed account of their weekly accomplishments. The email, which essentially attempted to provide 5 bullet points of work completed, received some resistance across every essentially government office, supported by liberal policymakers. It's always the liberal politicians. I always want to say this. And also, just one thing, when I say, liberal or conservative or something like that, I don't mean the people from the retail section, I mean the politicians, just to clarify that. So if I say something against liberals, I'm not saying against you if you're a retail person and you're a liberal. I'm saying it towards politicians that are liberal. Now, putting that aside, FBI is the liberal politicians that are rejecting writing 5 bullet points of what they achieved, essentially working for the United States government. Interesting part. They're getting paid taxpayers' money, and they can't be bothered to write 5 bullet points of what they achieved when they're getting taxpayers' money. FBI Director Kash Patel was among the federal workers who ignored the order by instructing his employees to essentially ignore the request, stating, "Please pause any responses." The State Department also essentially issued the same guidance, insisting that no employees is obligated to report their activities outside the Department of Chain and Command. Musk followed up on his warnings, retreating that failure to respond would be taken as a resignation. Pushback from federal agencies has not stopped Republicans from defending Musk's crackdown on remote work and government efficiencies. I don't think this is a request that is difficult, Senator John Curtis of Utah, Republican Utah, said on essentially NBC's Meet the Press on Sunday. He recommends that Trump's administration to balance accountability and empathy, adding that it should show a little compassion and dignity in this in this as well. I'm sorry, what empathy? You're using taxpayers' money. Politicians are using taxpayers' money. And if we're asking for 5 bullet points of what you achieved while getting paid taxpayers' money, you better come up with those 5 bullet points, because people who are paying taxpaying money are fed up with their money being used or misused, essentially. In February 24th, On Expo, South Carolina representatives Ralph Norman explained the need for employees to clock in physically into offices because no government agency was occupying even half of their office spaces, pretty much empty. These are tax-paying people. According to DOGE's essential website, the Department of Government Efficiency, the new office has made about $55 billion in savings as of February 17, 2025. The savings come from fraud detection, contract cancellations, workforce reductions, asset sales, and regulatory changes. One primary focus of the agency's work has been dismantling diversity, equity, and in conclusion, initiatives, which was the dumbest thing ever created. The DEI was the dumbest thing ever created. I'll be honest. If you are getting hired for a job, your skin color, your background, your culture, your religion should not matter. Unless you're aiming to become a priest or a father or a pastor or an imam or whatever religion you might be. Unless you're aiming to become a leader of a religion, then sure. Your background, your culture, your religion will matter. But if you're applying to work in a bank or in a tech firm or in the government or any sort of establishment, your background, your color, your religion should not matter in any sort of a way. What should matter is, can you handle this job? Especially if it's to do with tax-paying money in high-profile government jobs. If you want to get a job essentially in the government and you're going to be handling taxpayers' money, it could be a job to protect the country, if it, essentially in fact. You should not be chosen based on your religion or your background or your culture. I'll be honest. If they even chose, I'm Persian, for example, I'm Persian. If they said, we're going to give Persians only jobs, for example, DIA, Persians are getting a lot of jobs, I'd reject it. I'd say my people should not be getting jobs that they don't deserve. Because we're talking about an entire country. If it goes south, that's on my people. So it's just very simple, basic common sense. I don't know how we went from strive to be better to participation trophies. And the participation trophies started with children, for example, playing sports. And it went all the way into the adult category of people working in the government protecting countries, where we started handing out participation trophies. Why don't we just base on if you could get this job based on your IQ levels? If you're smart enough to get that job, then you deserve that job. No matter if you're black, white, brown, whatever you may be. You could be Iranian, I'm Persian. You could be Persian, you could be Indian, you could be English, you could be European, you could be American, you could be German, you could be whatever you want. Why don't we get back to the stage of, if you deserve this job because of how much work you put in, of how much common sense or knowledge you have about this, then you deserve that job. Not because, well, you look a certain way, then we should be handing you a job. Especially if it's to do with the government and protecting a country or protecting a finance of a country. Because that should just be common sense. We should stop giving out participation trophies. It was bad enough when we gave out participation trophies to, children when they played sports, because it puts a bad image in their mindset when they grow up that they just deserve to be handed to everything. But now it's even worse enough that we're giving participation trophies to adults. So I agree with 100%. DEI was the worst thing ever created by a mile. You should only be giving a job if you deserve that job in terms of your knowledge. In terms of you have what it takes to be that job. If you have what it takes to be a CEO or executive of a company or a doctor or a nurse, whatever the job may be, whatever category it may be in, whatever government job it may be in. If you deserve that job, then you deserve that job. But you shouldn't get a job based on where you're from. That is just wrong. Especially if it's about protecting a country or regarding a finance of a country. You deserve that job. And I think everybody agrees with me on that. There's not a single person out there that just says, no, we should be giving out, participation trophies to adults. Because I'll be honest with you, very simple. If I was going into surgery, for example, I was going to go to the hospital and I was going to do heart surgery. Would I want my doctor to be somebody of a different background because he was only hired because, he's from a certain country and a certain religion, therefore he had to be hired? Do I want somebody like that to be doing surgery on me? Or do I want the most qualified doctor to be doing surgery on me? I would want the most qualified doctor to be doing surgery. And that could be anyone with any background, any religion. I couldn't care less. But all I care about is most qualified, not where you're from, most qualified. You can be wherever you're from, wherever background, wherever culture, wherever religion. But most qualified is all that matters. It's very simple. Just think to yourself, would you want to be going into heart surgery with a doctor that had to be chosen, or a doctor that's most qualified for a heart surgeon for you? Most qualified will be the common answer. And same goes for any job role. For example, if you want to go on a plane ride and your pilot was only chosen because they had to be, would you rather have an experienced pilot, or would you have a pilot that had to be chosen? No, you want an experienced pilot because you don't want to land properly, not upside down. Some people will get that joke. Now, I 100% agree. DEI was the dumbest thing ever created. Because we're giving out participation trophies to adults. Most qualified, that's all that matters. You could be whatever background, whatever religion, whatever color, whatever culture, whatever you want to be, whatever background in the world. Most qualified is all that matters. On that topic, essentially, for example, the White House confirmed that 1,600 workers at the U.S. Agency for International Development's USAID has been fired, with nearly all remaining employees placed on leave. The sweeping job cuts have reportedly left thousands of federal employees scrambling for answers. Good that 1,600 workers of USAID have been fired. Good, more should be fired. Because there's too many of them working with absolute nonsense. The contracts they were signing was beyond dumb. Honestly, the contracts they were signing and giving out money to was beyond dumb. Signing $10 million contracts for cartoons to be happening in Syria, while Americans were living on the streets. Not all Americans, but while veterans, for example, are living on streets. American veterans should not be living on the streets. They should be treated with respect. They went to war for that country, and some of them are living on the streets, while America's USAID is sending $10 million to make cartoons in Syria. Why? Why is it important to send $10 million to put Tom and Jerry cartoons in Syria, but not $10 million to be invested into veterans in America? So USAID, the whole department, is an absolute trash. And every single person that works in USAID, that was a part of essentially these moronic contracts, should be ashamed of themselves, that their own citizens were suffering while they were signing contracts and sending money abroad. Every single one of them are scum, and they should essentially be ashamed of themselves. And on this topic, I don't know what I'm going to do at this point in time. I might have to look to sell my house because I don't have the servants or anything, said Charles, a recently released IRS agent in New York. I couldn't care less, Charles. Charles is a person that got fired by the Department of Government Efficiency that Elon Musk and Trump have created. I couldn't care less that Charles is fired. He used to work at the IRS. Now he's fired. You know why Charles is fired? Because he couldn't come up with 5 bullet points of what is achieved in the IRS. You're telling me you've worked in the IRS for 1 year, 2 years, 3 years, 4 years, 5 years, 10 years. You couldn't come up with 5 bullet points of what you did in the IRS with taxpaying money. So good that you're jobless, Charles, honestly. And everybody else that's like Charles should also become jobless in the IRS. I'm being very honest here, because enough is enough. So I'm happy that Charles is jobless. He deserves to be jobless. Because if you can't come up with 5 bullet points of what you did so far since day one until now inside the IRS, getting paid taxpayers' money, you should be jobless. And on the topic, per essentially Monday's Retainers News, updated essentially Chemics and company that works with USAID disclosed in a recent court filing that the contract suspension have forced it to furlough 750 employees, which is about 63% of its workforce. Also good. All the other companies that were getting paid by USAID, good that all of you are jobless. because it was nonsense. All the money that was being sent to you was absolute useless. And they had the cheek to ask for more. So that's what I meant by when I said in and out. Let's go in and out of the conversation for a second. Just to tell you about the DOGE's success rate so far, which is excellent. And there are people inside the retail section who are essentially in favor of their tax-paying money being stolen from them. But I mean, then again, brain cells is optional in today's world. There are people protesting and saying, why is Elon Musk looking into our financials? There are people protesting in America. Why is Elon Musk looking into our financials? Well, if he doesn't, no one will. But that's what I meant by in and out. Now, honestly, so far, what Elon Musk and Trump have achieved is incredible. Honestly, what Elon Musk and Trump have achieved so far is incredible. What they're going to achieve together, even going forward, is going to be even more incredible. But coming back now, actually, before we go back, let's go start the conversation first. And then we go straight into the news that's left. Thank you, Miles. Let's go free and further, no problem. I heard an influencer on the weekend say bonk on Solana will have an ETF. It is. It's going to be a meme coin, essentially, ETF that's happening. DEI failure example. How many Chinese are in the National Basketball Association? Honestly, it's the dumbest thing ever. Miles, I understand what you're saying. I have a BS2 master's degrees and doctorate. I have been turned for jobs and they were given to less qualified candidates. It's not always the most qualified. I agree. It should be. It should be the most qualified. As Dav and retired veteran, I do agree that money should not go outside the US for other countries. Facts. Monday complained about Trump. Tuesday complained about Elon. Wednesday complained about Trump. Thursday complained about Elon. Friday complained about Trump. Pretty much that's what's been happening regarding the news, honestly. Miles, you're on fire tonight. Let's go, Mike. Now, as a retired federal civilian employee, I don't agree that I have to tell you something I have done other than my job I was hired to do. Fair enough. Now, critical development. In partnership between Ripple and the giant German bank managing 377 billion euros. So, I'm guessing everybody has heard the news. And if you haven't, we're about to go through it right now. But the news about Ripple once again signing a massive bank. Is that a signal for a bear market? No. Decker Bank, one of Germany's leading investment banks with total assets under management of 377 billion euros, which is equivalent to $395 billion, has launched a cryptocurrency trading and custody service for essentially corporate clients. The milestone comes after nearly 2 years of development and regulatory approvals for the Federal Financial Supervisory Authority, BaFin, which is under the supervision of the European Central Bank, ECB, Bloomberg reported. Again, this is a Bloomberg report, not a random journalist, but a Bloomberg report. The Frankfurt-based institution is positioning its new service as a secure and compliant solution for institutional investors. We have the necessary experience and the necessary licenses and a tested, ready-to-use infrastructure to support savings, banks, and other institutional clients, Decker, essentially bank board members, Martin said to Bloomberg. The app gained even more attention after an announcement from Ripple's official X account confirming that Decker Bank's crypto services are built on Ripple's custody. It's a clear sign of the growing demand from institutional-grade crypto custody solutions, the statement said. And Decker Bank's entry into the crypto markets as an asset manager for Germany's largest financial services group, is that a signal for a bear market? No. Spokesman Fritzot signals the increasing acceptance of digital assets in the country's traditional banking sector. Biggest and increasing acceptance of digital assets now. Other financial institutions in Germany are also expanding their crypto offerings. Is that a signal for a bear market? No. Landsbank essentially abandoned. LBBW has also partnered with Bitpanda to offer cryptocurrency trading to corporate clients. Is that a signal for a bear market? No. While essentially cooperative banks led by DZ Bank plan to offer a crypto service to private clients by mid-year in collaboration with IT service provider Utriv and Stuttgart Stock Exchange. Is that essentially a signal for a bear market? No. Look, we have went essentially through a lot of things that are happening right now around you. The issue is some people, not everyone, but some people get distracted by noise, useless nonsense noise, like Bybit exchange, or essentially tariff situations that are short-term. They're going to be long-term positivity, or essentially token releases, for example, that's happening. This is just noise, and it's all on the tip of your nose. If you're looking at those things and you're thinking bear market because people on X are telling you to sell, influencers are telling you to sell, this is the end, everybody jump out, pack your bags, you're looking at the tip of your nose. The tip of your nose right now is Bybit exchange hack, tariff situations, and people saying it's bear market, everybody jump out now. If you look beyond your tip of your nose, you're looking at Morgan Stanley lining up crypto banks to get involved inside the crypto space. Morgan Stanley lining up crypto companies to help them to go public. Wall Street lining up crypto companies who didn't want to touch them on a 10-foot pole, helping them now to line up, essentially go inside the crypto space. Seattle saying to themselves, right now is the best time for Seattle to jump inside the crypto space, $1 billion firm. Bank of America's CEO essentially saying they want to go hard on the transactional side, of cryptocurrencies. The SEC, one by one, dismissing cases. Trump's executive order for cryptocurrencies still there. The SEC and CFTC come together after a decade to lay the foundation of cryptocurrencies. The CFPB pro-crypto, OCC pro-crypto, FDIC pro-crypto, Jerome Powell, Fed chairman, mentioning multiple times that American banks should be working with crypto companies and no one's allowed to stifle them, the same man that hated cryptocurrencies. Or any of these signals that's happening right now around you, a signal for a bear market? No. So stop looking at the tip of your nose and look beyond. And don't get distracted by useless noise. Look further. And on that note, especially the last one being Ripple just signed another bank. Is that a signal for a bear market? No. What did that bank say? The bank that signed with Ripple, what did they say? That right now is the perfect timing. They chose this time. Why did a major bank sign a contract with Ripple to launch now? If we're going into a close your bags, everybody run away, the market's about to crash. None of those are signals for a bear market. So stop getting distracted by noise and look further. And on that note, we have reached the endings of tonight's live. So if you're watching this for the first time ever, this is called the CMF Live, and it stands for Crypto Miles Family. My name is Miles. I'm the host of this live that you're watching right now. You can tune into this live Monday to Friday, on live on X or on YouTube, depending on where you're watching where from right now. And on this live, I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations. Vital information for you to know about regarding the world completely transforming into a digital space. So if you don't want to get left behind and you don't want to get distracted anymore from all the nonsense noise that's happening around you, then tune into this live because I will put you on the correct path. And thank you so much to everybody who liked, commented, and retweeted this live on X. And thank you so much to everyone on YouTube who's also liked this live and put a comment outside the live. And thank you so much to everyone who subscribed on YouTube watching this live and also who liked and who also followed me on X during this live. And I will be seeing everybody tomorrow for the next episode of CMF Live at 11:25 p.m. onwards, United Kingdom time. Follow me, turn on the little bell icon, or even join the Telegram group of this live, which is completely free. This live you're watching right now is free forever. The Telegram group that we have is free forever. And we also have an X communities page by the name of CMF Lounge, Crypto Mouse Family Lounge, which you can also join. It's completely free forever. Everything I do is completely free of source. I've been doing this for the longest time. And this is episode 268 of the CMF Live. Let's go to the comment section before we do leave. That's my bullet points. Let's go. I guess meme ETFs, a few of them are good to attract young generation to the coast and familiarity. Yeah. Good night, Miles and CMF. Very good news and live. See you tomorrow. Free and forever. See you tomorrow. Same time as usual. Night, Miles and CMF. Pablo, see you tomorrow. Same time as usual as well. Good night, everyone. See you, Bulex Sophie, tomorrow. Same time as usual. No, Miles, you can't stop now. Let's go, Scott. Scott, see you tomorrow. Same time as usual. Actually, another great job. I appreciate you. Let's go, Scott. Thanks so much for the kind words, brother. See you tomorrow. Same time as usual. Good night, Davey. Good night, brother. See you tomorrow. Same time as usual. Thanks, Legend. Night and day, CMF. Let's go, Shelly. See you tomorrow. Same time as usual as well. Thanks, Miles. Have a great evening. Let's go, Stormy. See you tomorrow. Same time as usual. Have a great evening as well. Thanks, Miles. Good night, CMF. See you tomorrow. Orphan. See you tomorrow. Same time as usual. Good night, CMF. Let's go, Stormy. Love, love, love hearing such words of wisdom, Miles. Have a great night and see you same time tomorrow. Let's go, Autistic. Thanks so much for the kind words and see you tomorrow same time as usual. Good night, Miles and CMF. Mike, see you tomorrow same time as usual as well. Mike, Miles, congratulations on another great program and episode 268. Let's go. Great as always. Good night, buddies. Let's go, Lena. See you tomorrow same time as usual. Most appreciated, Miles. Let's go, Susie. See you tomorrow, same time as usual. I will be seeing everybody tomorrow. Same timing as usual, 11:25 p.m. UK time. Or you could just subscribe and follow and turn on the little bell icon when I go live. I go the same time every day live, Monday to Friday. But if you want to, follow, subscribe, turn on the bell icon. Thanks. Let's go the new. No problem. Share the live, encourage folks to review it again and later. Let's go. And the new, let's go. Welcome to the CMF Live. I'll be seeing everybody tomorrow. Same timing as usual. Follow, comment, share, subscribe, retweet. See everybody tomorrow. Same timing as usual. Take care, Miles and CMF. Let's go, Ray. See you tomorrow. Same time as usual. Happy Pisces. See you tomorrow. Same time as usual as well. I'll be seeing everybody tomorrow. Same time as usual. Everybody have a great day or a good night, depending on where you are around the world. See everybody tomorrow for episode 269.